Let's discuss the concept of share surrender, the most beautiful aspect of the topic of internal reconstruction. This comes towards the end, the climax of the topic. That's the reason why this is one of the most ignored or least read and most commonly skipped topic. Long time due in your CA intermediate advanced accounting paper can very soon be part of your examination sometime. Can we discuss? Very simple. As a company, I have lot of obligations to pay. I am supposed to pay interest on debenture holders. I am supposed to pay arrears of preference dividend, or I owe money to my creditors or any other liabilities. It's been long term due and it's also overdue. I've gone beyond the due date, but I've not yet paid. When I'm supposed to pay, if I have enough cash, I would pay. My working capital is also little crunch. My profits are also not there. Overvalued assets, overdue payments, losses are huge, and company is basically on the verge of committing suicide. It revives itself by doing internal reconstruction. In this case, it decides to politely go and beg near the existing shareholders so that they will give some shares which can be used to pay these liabilities. You can convince your creditors, you can convince your debenture holders, you can convince your preference shareholders that you will settle them not by paying cash but by giving them equity shares. Your interest on debentures is due for last 3 years. Debenture holders have been due for redemption but you have not yet paid. Arrears of preference dividend is there for 3 years. You should give them money, but you don't have money to give. You will somehow convince them, I will give you equity shares. But to give equity shares, you should have authorized capital limit. What if the capital issued has already reached the peak that you do have no room to issue further shares? You have to go to MCA and then seek permission for increase in authorized capital limits. MCA will ask, wow, are you asking for increase in capital? That means you must be doing really good. You're like, yeah, consecutive last 3 years loss. Loss is so huge that capital is negative. Then MCA will not let you increase the authorized capital and go for further issue. What do you do in this case? Very simple. Only people who can help you now is your existing shareholders. To take one basket like this to your equity shareholders and then beg, come on, or in any language, भगवान के नाम पे पैसे दे दो बाबा. You beg. Yeah, they put money, not money. They don't have money. They give you shares. So that shares, what the shareholders will give you, will go to a basket called share surrender. The name is share surrender account. Think of the journal entry for this share surrendered by the existing shareholders. Very easy. Capital is decreasing. Share surrender is like temporary income. It's like we'll use it to issue to settle liability. Write the entry share capital account debit to share surrender. What is the entry? Share capital account, equity share capital account or preference share capital account debit to share surrender. Why did we collect these shares? We are going to use this to pay our creditors, to pay our debenture holders, to pay arrears of preference dividend, to pay preference shares which are due for redemption, to pay any of these people. When we give these shares surrendered to these people, don't try to write a direct journal entry. You will go wrong. Why? If you say you will pay them this, when you collected shares from shareholder, you will tell the journal entry is shareholders share capital account debit to share surrender. When you issue this share surrender to these people, what according to you is the entry? You will say share surrender account debit to creditors. Wrong. Why? If you credit creditors, creditors will increase. If you pay them money, don't you think creditors should decrease? Yeah. So what to do? Sir, simple sir. Creditors account debit to share surrender. You can't write creditors to share surrender. Why? Share surrender, if you further create, it's again increasing. Are they surrendering shares? Something is wrong. Exactly. You are missing one complete basket. What is that? Your favorite basket in the topic of internal reconstruction. Capital reduction. Are you getting it? Let's say I'm standing here. In front of me is shareholder and right in front of me is share surrender basket. I will ask my shareholder to drop the shares into share surrender and he will walk out. When my shareholder drops the shares into share surrender, journal entry is share capital account debit to share surrender gone. Next, my creditor is here. I need to give these shares to him. If I have to give this to him, I'll ask him to drop his creditor balance to capital reduction first. He will drop his creditor balance to capital reduction. Creditor is a liability reducing. Debit creditor account, credit capital reduction. So you pass the journal entry creditor to capital reduction. After he drops it there, he will come here. From share surrender, I will give him share. For that, the entry will be share surrender account debit to share capital. There are three transactions here. First transaction, who's doing what? Existing shareholder is dropping the shares into the basket. Entry, share capital account debit to share surrender. He will go. Then what will I do? My creditor will come. I'll ask my creditor to first drop the shares in, sorry, first drop the creditors in capital reduction. What is the entry when he drops it in capital reduction? Creditor account debit to capital reduction. Then he'll come here. Then from a share surrender, I'll give him share. What is the entry? Share surrender account debit to share capital. Understood? Three entries. First entry, when the shareholder drops the share in share surrender account. Share capital account debit to. Very good. Second transaction, my creditors will be written off. Creditor account debit to capital reduction. Third entry, to this creditor I'll give shares. Share surrender account debit to share capital. Are you getting it? Now, next question. When my shareholder drops the share into my share box, let's say equity shareholder surrendered equity shares. Can I convert that equity shares to preference shares and then give it to my creditors? Yes. Yes. My preference shareholder surrendered preference shares. Can I convert that preference shares to equity shares and then give it to my creditors? Yes. What, according to you, will be the journal entry when the shares which are there in the share surrender account are changed from equity to preference? Think, okay. My preference shareholder surrendered preference shares. I'm changing them from preference shares to equity shares. What is the journal entry? Preference share capital account debit to. Wrong answer. Come on, one more answer. Try. Capital reduction account debit to share account debit to account debit to equity. No, wrong answer. Tell it really what is the right answer? No entry. Why? When I receive the shares and put it in share surrender, within that share surrender account, it is changing from equity to preference or preference to equity. It's with me only. No entry. I'll write the entry only when I issue. When I issue, if I issue equity share capital, I'll issue equity share capital. If I issue preference share, I'll create preference share capital. That's it. This is a trick. Don't get stuck here. Don't give wrong answer. Preference shareholders surrendered preference shares. I converted them to equity shares before issuing to creditors. Is there a journal entry for conversion? When I issue, whatever shares I issue, that I'll credit. Got it? Quick 1 minute revision of everything that I told. First, we'll collect the share from the existing shareholder. Share capital account debit to share surrender. If these share surrenders are to be issued to the existing liabilities, first liability to capital reduction, then share surrender to share capital. Credit share capital will be whatever type of share issued, equity or preference, whatever. Further, I want you to importantly note, if equity is translated to preference or preference is translated to equity, there is no journal entry for changing shares within the share surrender account. Got it? See the first transaction. Existing shareholders are asked to surrender their shares. Journal entry. Equity share capital account debit. Preference share capital account debit. Whatever. Credit will be share surrender account. Come on. Next one. What is the liability resolved entry? Liability account debit to capital reserve. Then against the liability, if I give share surrender account debit to equity share capital or preference share capital. That is a share issue entry. Finally, if I've collected 10,000 rupees worth of shares, but I've issued only 8,000 worth of shares to somebody else, 2,000 is left in that share surrender basket. At the end, I'll empty the share surrender basket by transferring everything to capital reduction. At the end, I'll transfer everything that's there in my share surrender account by transfer to capital reduction basket. I hope you understood. Is it? Let's do a question on this. Come on, help me do this. This is the question. This is how the balance sheet of the company looks. Our AQ 9, accounting quotient 9. On the capital, we have 1000 shares of rupees 100 each, which forms 1 lakh rupees of capital. We have long-term borrowing 10% debentures of 40,000. Resolution has been passed in the process of internal reconstruction to make shareholders surrender 100 equity shares. Shareholders are surrendering how many equity shares? 100 equity shares. When shareholders surrender 100 equity shares, can I say our equity share capital will decrease by 100 shares? Each share being rupees 100. Do 100 shares into 100. Can I say 10,000 rupees? I'll write equity share capital account debit to share surrender account. I asked my shareholders to drop it in share surrender account and they've gone. What am I going to use this for? Maybe to pay debenture holders. Read the second point. To convert surrendered 100 equity shares into preference shares of same value. No entry. When you convert the shares which are surrendered from equity to preference or preference to equity, there will be no entry. However, later when the surrendered shares are issued against the liability, then I will credit equity shares or preference shares, whatever is issued. I hope you got it. Let's go forward. What do we have after that? Third point, 80 of the surrendered shares are issued to debenture holders. First, close the debenture account. First, close the debenture account. How much is debenture? 40,000. So, I will debit 10% debenture account. Debit how much? 40,000. Credit debenture holders account. I'm assuming full settlement. I'm assuming full settlement. If you want, I can add that word in full settlement. What if you don't add the word full settlement? Then so much balance will be still outstanding, payable towards debenture holders. Now, how much am I supposed to pay my debenture holders? 40. What am I doing? I'm giving them equity shares which were previously surrendered, which are now converted into preference shares. I'll debit my debenture holders by 40,000. What am I giving them? 80 of the surrendered equity shares are now transformed into preference shares. I will credit capital reduction first to the full amount. Am I right? I told no. I'll ask my debenture holders to drop it in capital reduction. Then they will come to me and then I'll give them shares. If you try to write straight away debenture holders to equity share capital or share surrendered, that's where the problem starts. Liability holder will drop it in capital reduction account. Then from share surrender, we'll give them shares. From share surrender, when I give you shares to liability, the journal entry will not include the liability name. Journal entry will only include share surrender is decreasing, debit. Credit will be share capital, whatever is given. So when the shares are issued out of share surrender, entry is share surrender account debit. How many am I issuing? 80 shares, each of rupees 100. Am I right? 80 into 100, 8,000. 8,000 credit. I'm giving them preference shares. If they have not mentioned the percentage, I'll write X percent preference share capital 8,000 credit done. How much did I collect here by way of share surrender? 10,000. How much have I used here? In the share surrender basket, first they put 10. Now I've given 8,000 worth to debenture holders. How much is still remaining in the share surrender basket? 2,000. Now this will be closed by transferring or emptying this basket to capital reduction. Entry will be share surrender account debit 10 minus 8, 2,000. Credit capital reduction 2,000. It's a very important point that I want you to note. In this revision, we'll do revision once again. First, share capital to share surrender. If you convert this shares equity to preference, preference to share, no entry. Against the liability, if I'm issuing this share surrender, entry will be first liability to capital reduction. Then share surrender to share capital. Any balance in share surrender will be closed by transfer to capital reduction account. From capital reduction, it will later go to capital reserve. I hope everybody understood. Read this point lastly. Accounting for liability settled out of shares surrendered. First, close the liability by transfer to capital reduction. Second, issue shares out of shares surrendered created on surrendering the shares. Balance in share surrender account is closed by transfer to capital reduction. Same thing I've told it several times because I don't want you to write exam several times. Copy.